value project if we apply logarithmic regression. Now, there's been a lot of talk about Bitcoin having these days and stock to flow models. So in CoinMarketCap, we can see from its inception on a log chart what's been happening to Bitcoin. So you can see here how on a log scale, instead of going 1, 2, 3, 4, you go 10, 100, 1,000, 10,000. And the x-axis, of course, remains linear. So, whereas the y-axis is exponential. So, there is now something that's very exciting, which is called the stock to flow model. And if we apply this to Bitcoin, we can see that as the supply goes down, that is the number of new coins that enter the market in a given year, compared to the total existing supply. Every time there's a halvening event, according to the stock to flow model, there's a potential for an explosive upward movement in the coin. Now, here we can trace this movement on the historical graph here at this website, digitallick.net, where the historical price is following this kind of logarithmic trend here. You can see on the vertical axis the original price, less than a penny, 10 cents, and by 2011 it began to hit the dollar range. It hit $10 sometime near the middle of 2011. Started seeing $100 around 2013. Then it started climbing to $1,000 in 2014, and somewhere in here we've seen halvening. So it happens every 4 years, and previously we had one in 2016, prior to that in 2012, and what happens in this stock to flow is you see two lines. So there's a stock to flow prediction from 10 days versus 365 days, sort of an upper lower band price predictor based on the halvening event and the limitation of new coins reaching the market. So here in the previous halvening in 2012, we see stock to flow in 365 days was about $12, but after the halvening, we see the 10-day stock to flow is significantly higher at about 200, and starts to go up quickly thereafter. And there's a window here of several weeks to months after the halvening when you can expect a significant increase. So here the price at the end of the day is indicated in orange, 868 in December 2013. 10-day stock to flow was $100, 365 days $115, and it was actually much higher. So even this can be underestimating what we might see. But let's take a look what this model is currently based on. Current actual up-to-date data predicting for stock to flow changes that are approaching the halving. So we can see today Stock to flow is predicting anywhere between 8,000 up to about 11,000. And the actual price is a bit below this. That's because of the Black Swan event last month. It's at 6,000. But we seem to be regaining our legs here. And we'll take a look at why that might be, other than the approach of the halving. There's a few key items that come to mind. But let's pursue this and see what's happening. So now, if you follow here on the bottom, you see now we're in April. Stock to flow is matching around 9,000, mid 8,000. Halvening should be arriving in about May. They've put it here May the 12th. But immediately following, as you can see at the end of May, the 10-day stock to flow model predicts 90,000 in the upper band and around 10,000 in the lower band. This continues following logarithmic charts until the end of 2020, when this model suggests on the 365-day lower band around 30 to 35,000 and about 100,000, 90,000 upwards on the 10-day stock to flow for the end of 2020. Coming into 2021, we can see these two bands begin to match, and the price should stabilize around a mean of 100,000 somewhere in the middle of 2021. Which is to say, we can expect these type of peaks, and we've heard some very positive community remarks suggesting that we may see a height of over $250,000 US sometime during 2022, which is not impossible given the propensity of this spiky uptrend, even along this baseline function. Now we can see, extraordinarily enough, after the next halving event, which they've put here around March, I think, March 2024, that end of March, probably early April, they put it for April, I think, 2024. The price will then, the upper band will go to about $1 million following the next halving event. So you want to hold and purchase and or buy Bitcoin if you believe this stock to flow model. They've applied it to gold and other commodities, and here we do see a baseline logarithmic growth trend that can be adapted to this stock to flow model. Now, if we want to understand what's going on, why there is this, current uptrend, last few days we're seeing recovery from the Black Swan virus event, and headlines of Cointelegraph April 1st are Fed's quantitative easing strategy holds long-term benefits for crypto. So they explain that, and the reason is that when the Federal Reserve begins to pump out trillions and trillions of dollars, that this will trickle down not only into mortgages and securities and treasury bills, but since it's QE infinity, and the statements coming from the government are that the US dollar is, Goliath, it's a behemoth, it's taken down the gold standard. So it remains to be seen what exactly is back in the US dollar, other than the hubris and post-World War kind of economic shift from Europe to states on the basis of their armed endeavors against Japan and Germany. So that's a bit disconcerting. If that is the case, because the only thing backing up the US dollar is violence. But there is some comment here that's interesting. These are effective movements towards a more decentralized world economy, which blockchain technology seems uniquely poised to play a key role. This might speed up the demand for blockchain solutions and therefore improve the long-run viability of blockchains and their associated cryptocurrencies. So these structural changes that are coming to the world economy may make room for solutions in the crypto space. Government is interested in any kind of technology that can help them to track where money is coming and going, and Bitcoin unfortunately offers that transparency for any and all onlookers. So another reason, besides the Fed printing money ad nauseum, that we might think, is responsible for, what's happening now in Bitcoin, which is that we're seeing a bit of a bull run, is there may be a bit of printing going on in the crypto side. We know, and we boast in the limit of the number of Bitcoins, the limit in the number of Tether is not apparent. They have no limit. So here's the headline: Tether prints over $1 billion USDT in March. Rising demand or exchange run. Tether's printer is going brr. So this is a saying that people are using nowadays. On Twitter, you'll see fiat printer, Fed printer going brr. And now the question arises whether anything is backing the printing of all this USDT. We know that secretly all crypto hodlers and investors are glad. They see this as some kind of a justice to match the unbounded printing by the Federal Reserve and the government and the banks. It used to be that banks required a deposit, whereas they could leverage the lending and printing of dollars based on what was deposited. Now this has been reduced to zero. So in other words, no deposits are required for banks to print. And of course, this is going to cause massive inflation. People are being laid off from their jobs. The government is saying, we'll take care of you, but of course, commodity prices will increase. For example, if you look at food, scarcity of toilet paper, all of these things are going to become a concern. As of course, printing money doesn't offset the actual productivity of farms where people may or may not be currently working. Breakdown of the system occurs, in a piecemeal fashion. Key links in different industries can lead to a domino effect very quickly. So, secretly, all the crypto hodlers and investors are glad. Bitfinex looks like a bit of a mafioso, notorious for printing USDT without any potential, backing of assets to back their printing machine. But maybe it is a kind of a justice. If they are simply mirroring the fabricated, economic power of government, which they've handed over to large corporations, and are basically running roughshod over the labors of the working class, whose purchasing power is reduced to nothing in this potential future, where the giant corporations are given billions of dollars to do what? And does this money reach the people who are being laid off? Some companies are saying we'll buy you out, but by and large, in a service economy, there's not going to be much to sell, and if their gathering of people is forbidden, everything's going to come to a standstill. So it's kind of a question of who can inflate what fast. Now, you may want to consider this as educational advice. I'm not an investor advisor. I am an investor, so I cannot give you financial advice as my profession. This is purely for entertainment. But I do hope that you can see we are potentially in the beginning of quite a remarkable bull run. Halving is just around the corner, and we know that the increase that's predicted in the stock to flow model can be exceeded, which is the great excitement. But the baseline function here seems to be quite favorable in the 2021s. But a year from now, we should see stabilized price about 10 times what we have now. You can't see that in any other asset. Uh, so if printers are going burr, make sure you grab yourself, as maker of Litecoin, Charlie Lee says, make sure you have at least one Bitcoin. And that's all for today. Bring you more exciting developments in the crypto world soon. Take care.